The Reserve Bank has kept rates on hold. The move was widely expected as persistent inflation risks remain. The SARB has long been clear about its concerns about price pressures, stating that it wants inflation to reach 4.5% year-on-year and sustainably remain around this level before it can cut rates. Inflation increased to an annual rate of 5.6% in February, that's from 5.3% in January and 5.1% in December.
What would be the bar for South Africa cutting the rates? The bar is the same. You just have to look at what is happening to the inflation rate and what is happening to the future trajectory of inflation. And to the extent that inflation is expected to decline to target and would be sustained at that midpoint of our inflation target range, which is 4.5%, then at that stage, the MPC could confidently look at that and say, is this sustained on a forward-looking basis? And then we will consider recalibrating policy as appropriate.
A national treasury project to integrate the financial management of national and provincial government has been found to be irregular by the Special Investigating Unit. Treasury has consistently maintained there was no corruption involved in the contract with Oracle to implement the project. But the investigation has found that supply chain management processes weren't followed and there's been fruitless and wasteful expenditure. Treasury's DG Duncan Peterson disagrees with these findings. The SIU says disciplinary referrals have been made, a blacklisting referral has been issued and criminal matters have been handed over to the National Prosecuting Authority. The SIU will also institute civil proceedings in the special tribunal for the contract to be cancelled and, if necessary, for money to be recovered. Robust, that's how Old Mutual's described its annual performance. The financial services provider has posted a 26% rise in headline earnings, citing exceptional sales growth. Its key life segments registered a 17% increase in sales during the period amid a challenging economic climate. Old Mutual's upped its total dividend by 7% to 81 cents. Looking forward, the group says it is making progress in its bank build, which is on track to be launched within the next 12 months, subject to regulatory approvals. Momentum Metropolitan, meanwhile, has lifted its payout by 20% following a solid half-year performance. The insurer has posted a 69% jump in operating profit and a 42% rise in its headline earnings. Momentum Metropolitan says most of its business units performed in line with expectations, and that those results were also supported by a strong improvement in investment income on the back of high interest rates. Metair is back in the black. The energy storage and automotive components company has posted annual headline earnings per share of 135 cents. That's from a loss of 17 cents previously. The swing is largely due to the group's focus on the recovery of its wiring business at its managed associate Hesto Harnesses and stabilizing its Turkish operations. But despite the improvement, Metair says it won't be paying out a dividend. Acquisitions have given CA sales a boost. The fast-moving consumer goods company says that, along with its expansion into new regions and on the onboarding of new clients, lifted annual revenue by over 19%. Headline earnings per share increased to 25.3%. The group operates in several southern and East African countries and says despite the challenging global economic landscape, it's poised to deliver favorable results for the year ahead. That's due to a robust balance sheet as well as a widespread geographical footprint. Sasfin has suffered a profit knock. The financial services group has reported a 62% plunge in half-year headline earnings. That's due to negative adjustments to the firm's fair value loans and private equity portfolio and an increase in credit impairments. Sasfin says that reflects the challenging economic environment for businesses within South Africa. And given that, the board has resolved not to declare an interim dividend. PPC's revenue has jumped. The cement maker's sales for the 10 months to end January rose over 27%. That's thanks to the performance of its Zimbabwe operations, which helped offset weak sales volumes in South Africa and Botswana. Those regions felt the pinch of a weaker retail market and the lack of infrastructure projects in the area. Looking ahead, PPC expects markets in South Africa and Botswana to remain subdued, while the firm remains positive on Zimbabwe's prospects. DataTech expects to report a 5.8% rise in full-year revenue. The international ICT company says this is as a result of its ability to build on the strong operational performance it reported in the first half of its 2024 financial year. And strong demand for technology solutions and services also worked in its favor. The group will release results on the 27th of May. Sirius Real Estate has exchanged contracts on the acquisition of Vantage Point Business Village for £48.2 million. The asset is a multi-let business park in Gloucestershire, and the acquisition price represents a net initial yield at acquisition of 10.2%. The transaction will be funded using the proceeds of Sirius's recent capital raise. The deal represents the first asset in the UK and is the fourth asset in total acquired by Sirius this year. African Bank has obtained shareholder approval for the implementation of its employee share ownership scheme. This is part of a first phase of preparations for an initial public offering for the group. Further details of the scheme will be provided when the firm releases half-year results in May. Further afield, one of the world's leading fashion retailers, H&M, surpassed first quarter operating profit forecasts, which was assisted by a fall in sales that was smaller than anticipated. Here's more detail in this package report.
H&M shares soared over 13% early Wednesday. Investors were happy to see the world's second largest fashion retailer beat first quarter expectations. It posted an operating profit of $196 million for the period, well above analyst projections. A 2% fall in Q1 sales was also better than market watchers expected. Sales were up by the same margin at the start of the second quarter. It's a sign of stronger demand for the Swedish retailer's clothing and accessories. New CEO Daniel Hervé said spring collections were well received. He also repeated H&M's goal was to hit a 10% operating profit margin this year. The retailer is known for its cost-effective clothing, but it's moved into more expensive offerings, including through its COS brand. That as it responds to the growth of online fast fashion competitor Shein. The Chinese retailer has eaten into H&M's share at the lower end of the market. Bigger rival Zara has also extended its dominance in the sector.